Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome back,
Yeah.
Art Jarvis.
Yeah, I was way out of town.
way out of town. And you know what? I saw some pictures, and I've heard a few stories from you. Sounds like it was a wonderful vacation.
It was absolutely fantastic. And I say this to people all the time. Whatever it means to you, get out and see the world, because the world is a beautiful place.
Amen. And we might talk about that some more. But, so when I say welcome back, we are talking Taking Stock, episode number 30, ready to roll.
Ready to roll, ready to earn my spot back. I was getting a little concerned about that guest you had a couple weeks ago.
Well,
so
yeah, your lovely daughter, Katelyn Jarvis, joined us for episode number 29, did a great job sharing, making compliance interesting.
well, I mean, if she did that, then kudos to her, because there's actually a method behind my madness, right? There's a reason Katelyn Jarvis works with me. There's a reason Austin Jarvis works with me, and one of the big chunks of the reason why Katelyn works with me is because of compliance. She has a compliance history with the Department of the Treasury. And in all honesty, I was always compliant, but she has really taken our compliance to a whole new level. So, she was definitely the person for you to talk to when it comes to that.
Well, she wrapped up episode number 29 with a very simple statement. Mm-hmm. In 2 weeks, the people are going to want to know all the ups and downs, what's going on in the economy. Yeah. And Dad will be back,
Yeah.
Art Jarvis. In fact, Art Jarvis is here with me again today. And you know what? This is kind of funny because it took you an extra day to get back. We won't talk about why, but this is Wednesday instead of our usual Tuesday recording date for the Taking Stock episode. So
Wednesday, July 24th is today.
That is correct.
Correct?
Sir.
Okay.
All right. That is correct, sir.
Good. I finally caught up to where I'm supposed to be.
Well, I know how it goes after those vacations. But while you were out, there was a note on on the Taking Stock episode 30, while you were out, is where we begin.
Yeah.
While you were out, a lot has happened.
A lot has happened. You're exactly right. And let me go with my normal statement. Pay attention to the numbers.
Okay.
There is a whole lot of drama that's happened in the last couple of weeks. And how and when all that will shake out will be very interesting over the coming months. But it's going to cause volatility in the markets. Okay, so we're going to see some bouncing around, especially considering the fact that we, at one point, were in the 5,600s on the S&P. Now we're back down into the 5,400s because we're having a really bad day today, and yesterday we lost a little bit, so we're back down into the 5,400s on the S&P. But once again, if I'm going to continue to focus, I'm going to focus on interest rates, which have dropped since the last time we talked. We're down to basically, we'll just call it 4.25 on the 10-year. The inflation numbers, the consumer price index dropped to 3%, actually 2.98 if you want to get technical about it.
And just a reminder for everybody, because, it's been a couple of weeks, so just a reminder for everybody. Actually, it's been a month, but Art likes it at 3.
I mean, that's my sweet spot, right?
Right. I just want to remind everybody that 3's good. If it's less than that, that's fine.
If it's below 3, it's icing on the cake, in my opinion.
I like a good icing.
Right. Exactly. But so and then you look at the personal consumption expenditures index that the Fed likes to look at, the PCE, and that's at 2.6% now. And if you want to keep going, the producer price index, which is the wholesale prices, is down to 2.6 also. So the things we have been talking about, we're still seeing interest rates remain stable or lower. We're continuing to see the inflation numbers come down. We're continuing to see the future earnings numbers or projections, continue to watch them go up. Not at any kind of great clip, but at least they're going in the right direction. Okay, so looking at the numbers, not a whole lot has changed. Now,
that's solid supporting what you said, because we knew many episodes ago we're coming into a presidential election year, and I posed the question, what's that going to mean? And you said history shows us that it really doesn't mean anything. Yeah. Things stay pretty much the same. I was going to call you on it a minute ago, because a minute ago you were talking about, a lot's happened the last 2 weeks. We're going to see how it's going to shake out, and it means volatility. I said, well, that's not what you told me.
Well, volatility just means we bounce around a whole lot. If we're still aiming we're in A, we're still aiming for B, it just means we have a little rougher ride getting to B, in my opinion. So
bumpy.
Bumpy.
Well, let's not use that term.
Well, and don't get me wrong. There's going, depending on how all this shakes out, there's going to be a candidate that is going to be less pro-business, right?
Okay.
And there's going to be a candidate that's going to be more pro-business. There's going to be a candidate that's going to lean toward lower taxes. There's going to be a candidate that probably leans toward higher taxes. That all has an impact on everything in the future. Right, so you're going to have all that, and that's the kind of things that are going to cause the volatility. Now, who's who? Well, that's for our listeners to decide. But
well, how do you see, or kind of the term everybody likes to use? What's your takeaway right now on? Let's go to Saturday assassination attempt.
Yeah.
Almost 2 weeks ago now. To today. The events that have taken place, which include, start with the Saturday assassination attempt at a Trump rally, followed by a Republican National Convention, which seemingly stirred a lot of excitement and a lot of energy and a lot of positive things, followed by a call for the Democratic nominee to step out.
Sure.
And which brings us to the last couple of days, where now we're seeing, there appears to be a front runner for that presidential nomination, or whatever, candidacy is, I guess, the right word, for that presidential candidacy on the Democratic Party side. Nothing's changed on the Republican Party side. The Trump-Vance ticket is what we've been made aware of. So what's your takeaway? Because the market has looked pretty volatile in these past, 11 days.
Yeah. Wow. There's a lot in that question, right? There's a lot of layers in that.
That's my job.
There's a lot of layers in that onion. But, for my personal first takeaway is everyone's saying the right things, right? We're together. We're unified. We're not working for 50% of the country. We're working for 100% of the country. Those are the words, one, we should hear, but as I may have mentioned to you before, I'm always show me, don't tell me, right? So show me that these are the things you're going to do. So we have to get to that point. But so you have that whole part. Let's say what happened on Saturday with former President Trump. Let's say that turned out way worse than it did. Well, you and I would be sitting here having a much different conversation. That would have been hugely destructive to the narrative and things like that in the United States. It would have been, the stock market would have dropped hundreds of points if that had happened.
The term people have used, from all sides, is that's a very dark day. But you know what? You're talking about that's a very dark day in the economy, in the money market world, in the world of investing, in the world of all of that has to do with money, finance, and the economies. Maybe even global economy is impacted by that.
Oh, very much so.
Thankfully, though, Art, we're not talking about that.
Oh, so, and honestly, I woke up to that video. That was my first, and someone told me that he had been shot, and my first reaction was not a good reaction because I think in terms of what's it going to do to our markets, what's it going to do to our economy, and things like that. And I saw the video, and I was like, okay, it's not near as bad as it could have been. So,
well, and for the listeners, because you just said you woke up, and everybody knows it was at 6 p.m. Well, Art already told us he was far, far away. So he was far, far away in a land where it was supposed to be sleeping at 3 o'clock in the morning or something.
Yeah. No, that's exactly when it was.
So yeah.
But
well, remember my first question to you was, were you sleeping when news broke of the assassination? Because I kind of had an idea of where you were, and I thought, a whole different first report to you.
Yeah. And
what I want to know is why that first report to you came from Kim Jarvis, your wife, who was apparently awake at 3 a.m.
Well, don't remember, 3 a.m. there is 9 o'clock.
Fair enough.
Yeah, so she's technically awake at 9 o'clock at night.
She was on her Eastern Daylight Time clock still. I got you.
Our clocks are all messed up. But, in fairness, that lag in information for me is a good thing because they were able to sort a few things out before I actually saw it, as opposed to me watching a bunch of people speculate on certain things, right? So by the time I saw it, there was already some at least reasonably reliable information coming across, right? So yeah, but again, that didn't happen. That's not the conversation we're having and things like that. But we're going to have a whole lot of conversations over the coming months about, this is being said and that's being said and this is being promised and that's being promised and we as Americans we're going to have to sort through that. Number one, try and sort through it, and number two, try to determine what is that impact, or for me anyway, if that is number one true and that is the outcome, what's the impact in the next 12 months, let's say.
And all through that, and especially for the listeners today, as you're listening to this, you're going to be saying, pay attention to the numbers. Mm-hmm. So I say that especially for the listeners. You're going to be hearing the numbers from us. We're not going to sit down in 2 weeks from now and 2 weeks after that for the next 4 months until Election Day and post-Election Day. We're not going to sit here and talk politics.
Right.
This show is taking stock of the economy, taking stock of the marketplace, dollars and cents, and what's happening. And I know Art, you're going to say, pay attention to the numbers. And so, folks, when you tune into Taking Stock from here today, the rest of this going forward, you'll hear us talking about the numbers.
And more importantly, the trend in the numbers.
Right.
Even that for me, it's like, you can always get one number that's not what you hoped it would be, or it's a lot better than you expected, and then things kind of normalize in the next number, right? So I always pay attention to the trend, pay attention to the smoothing of the numbers and things like that. So you're exactly right. That will be that'll be what we concentrate on always.
Well, I've been watching it, as I've said many times on episodes 1 through 29. I'm watching it more closely, learning more things, understanding what's happening better just from our conversations and what I learn here every 2 weeks. It's still up and down in a day.
Oh, yeah.
We don't know. Closing bell 4 p.m., right? Is that right? Or
correct.
Yeah, closing bell 4 p.m. And we're at, as we record this, we're coming up on 1 p.m. on Wednesday, the 24th of July. So in 3 hours from now, approximately, we don't know where it's going to close at. Yeah. And Art's doing really good, folks. Right now, he's not sitting there looking at the green and the red on his device. It's within. He just grabbed it. I ruined it.
The reason I'm not looking at the green is because there is no green.
But anyway, the point is, it's almost really kind of steady now. I mean, it drops. We're not like dropping yesterday, dropping today, dropping tomorrow, dropping the day before yesterday. we're seeing the rise and fall of the roller coaster of money and economy and investing. Stock market prices we're seeing that roller coaster ride daily.
Right. And don't forget, we're still up substantially from where we were back in October. But here's the interesting thing to me now that we've been seeing over maybe the last couple of weeks, and we'll see if it continues, is, we have talked for months now that, this market's done well, but it's been basically a technology-driven market. So if you look at the weighted index, let's say it's up 14-15%, but you look at the unweighted index, which is not as heavily driven by technology, it's only at one point it was only up 8%. It's up less now. The interesting thing now is you look like, if I look at today's market, the downtrend is being driven by the technology stocks. So my question I would pose, or I would hypothesize, is that maybe we're starting to see a change in the leadership in the markets, which I would like a lot. I would love to see us move away from how much we've been dependent on the technology stocks, and move into more of the some of the consumer cyclicals and the financials and things like that, but some more of the growthy stocks, and start seeing a much more broad-based move in the markets as opposed to just being driven by technology. So that would be a good thing. That would be good for the portfolios. That would be good for the economy. So
that description of seeing a switch, because we have spent a lot of time, especially talking about AI specific in the technology market, and seeing that you're seeing that little bit of a change. I just wonder how much of that, it's interesting to me, we'll have to see, obviously, wonder how much of that is driven by the politics that's happening around us, which we're not going to go into in depth right now. I just told everybody we're not going to talk about politics, but it does make you wonder, are the people seeing a shift in where technology will go based on which candidate's going to be for business, which candidate's going to be for whatever, so on and so forth.
Well, I don't care what side of the aisle you're on, you have to be worried about politics. Okay, now that's not what I'm going to make. So that's not my go-to for an investment decision. But you have to be concerned. Number one. Number two, you have substantial profits and gains in the technology sector. So if the technology sector is up 30% in the last 12 months, you don't want to lose those gains. And I think that's what happened now, is you're starting to see the profit taking going on, and I don't want to lose these gains that I have, so I'm going to go ahead and take and move over. Hopefully what that means is we'll see these gains. Well, they have to go somewhere with the money. So either they're going to go conservative, or maybe they're going to rotate it into a different sector in the stock market. So that remains to be seen. Hopefully that is what ends up happening. But,
well, you just answered the question I should have asked, so I appreciate that. Because that explains, without saying it was just purely politically motivated. It's loss and gains motivated. So,
well, what drives,
big surprise, right?
What drives the market?
Well, you're asking
me? Yeah.
I'm supposed to
see if you've been paying attention. Fear and greed.
Right.
Fear and greed. Yeah. Right? Greed, I don't want to miss out, and fear, I don't want to lose what I have. Right? So that's.
See, I was going to get all specific. I wasn't going to say fear and greed. So we'll be reminded now that it's fear and greed.
Right. I'm a keep it simple kind of guy, right?
Well, I'm going to follow that. I've been one that's always been out there saying that KISS theory. Keep it simple. We don't need to say the second S.
I learned the KISS theory early in my 20s. So
likewise,
it's a good one. Yeah.
Likewise, yeah. I've been carrying that around. Yeah. Whether I always follow it or not, but I carry it around with me.
Yeah, there's moments.
Well,
but
those who know me best say he's not necessarily simple.
Well, yeah, and here's from a portfolio management standpoint, I mean, the portfolios have done well here in the last 9 months or what, since October 27th. I don't know, this is the bottom, but they've done well. But they're not up 30% like the technology say. I'd have to be 100% technology to be up 30% in that sector. Nice. Or, have a whole bunch of NVIDIA in the portfolios or something like that. But, I run a diversified portfolio. There's 12 S&P sectors. I'm targeting 4 of those sectors. I'm looking at the small cap market. I'm looking at some of the international market. And even here recently, let's just use round numbers. Let's say the Nasdaq, which is the small cap or the technology more driven, is down 1%. The portfolios might only be down 0.5%. Or on the up days, the market is up 0.25%, but the portfolios are up 0.5%. So you're starting to see. What I like to see is, I'm actually doing my job maybe, is, I'm outperforming the market because it's more of a broad-based kind of move. So, that's 2 to 4 weeks worth of data. We still have a lot more to go, but hopefully that's how it continues.
For sure.
Yeah. We'll discuss that in future episodes, I'm sure.
Well, I got caught up in, when you're talking about the broader range, of a portfolio that's more diverse. Well, I kind of got caught up in the international aspect, and the reason I did that is because all of a sudden it clicked that memory trigger, and we have promised the people that we were going to talk a little bit more about some of the international marketplace and where that fits into people's personal investment portfolios today. Right. So, without getting into some detailed thing, because I didn't say, hey, that's what we're going to talk about today, so you didn't get to come in today totally prepared for that. But some generalizations about the international portion of the marketplace and the international stocks. I guess I shouldn't say the international portion of the marketplace, but the international stocks and where they fit into our portfolios here. What are some of the generalizations about that?
And here's the interesting thing. So if you go back to the 90s, we had less of a global economy. Okay, it's much more intertwined now, 30 years later. But, if the United States was not maybe doing well, or the U.S. markets, maybe you could go to a different country or something like that, or a different region in the world, and link up with a region or a country that kind of picks up the slack if you're not having the warm fuzzies about the U.S. market. Nowadays, it's less of, instead of me, I'm still going to go out and look. I want to look for another investment, whether it's a region or a country that has a different correlation or correlation coefficient to what the U.S. market is. The problem is over the last 30 years, those correlations have tightened up a lot. So what happens in the U.S. tends to globally kind of be fairly tight. But that doesn't mean you can't go find that country. Let's say I go look for Hong Kong, or I go look for England, or I go look for Mexico, or Canada, or some other specific country, just like I would in a portfolio that maybe I'm not looking at the energy sector, but I'm looking at the consumer or cyclical sector. Or maybe, I'm looking for something that has been neglected and going trying to find. So, and that's no different with countries or the international markets. I'm still, if I'm not thrilled with the U.S. market or the potential for the U.S. market, let's go somewhere and find something that maybe will not only protect the portfolio, but hopefully add positive absolute performance to it at the same time. So interesting enough, the name of the company is Jarvis Global Investments. So, back in the early 2000s, when I named the company, there was a purpose for me naming it Jarvis Global Investments. And some people are like, well, I don't even know what you do. It's like, it gets a little complicated. But I wanted to emphasize the fact that, we're going to run portfolios for people that are of a global nature. We're not just running S&P 500 portfolios for people. This is something where we're going to concentrate on the entire globe and try and find investments that we can add value with.
That's excellent explanation.
That's a mouthful.
I've never really asked, because it was interesting when you said there was a purpose, and people said, well, they don't even know what that means or what you do. Yeah. So I've never really asked you, what do you do? What does Jarvis Global Investments do? But I think that helps shed some light on. Again, it was purposeful, and so advising your clients and helping them create their portfolio, and the bottom line is add value is purposeful.
Yeah.
And the
Definitely.
global, the international stocks and opportunities are a piece of that, and probably have to be.
Yeah, it could have easily been named Jarvis Investment Management, or it could have been Jarvis Investments, or it could have been Jarvis Wealth Management, or something like that, which probably in the
But it had
long
to be
run-
Jarvis?
Well, yeah, I can, it's a little self-serving, but I'll take it. But but it's boring. Like everybody's named something like along those lines, and there's probably a good reason for it. But I wanted something a little more descriptive and something a little more exciting, and it's worked out in my humble opinion, right? I mean, it's maybe it could have been better. Maybe
Well,
it would have been a little worse.
you got past that. What is the 5-year mark?
We're a little bit past the 5-year mark.
You were still in business for year 6, 7, and now into the 30 plus. I forget.
Yeah.
Getting more toward 40 than anything else.
Yeah, the good thing is I have people in my life who I've known for decades who trust me. And even back when I was learning and meeting these people, I wasn't even thinking about Jarvis Global Investments, right? But there was a process there where people got to know me and came to trust me with their children and other things, coaching their kids and
I got you.
and all that good stuff. And, that carried over. So, maybe the name wasn't as important as all the emphasis I put on it, but it's more of the, as always, it's more of the relationship that really is the important part. So.
It is the relationship. And when I said purposeful, but it was purposeful in helping design portfolios that were ultimately going to add value.
That's the goal.
And regardless of the name of the company,
Right.
the purpose was the same.
Correct.
So, but the name lends itself to the purpose.
It does.
How about that?
Yeah, at least in my brain.
Well, I don't know if we convinced any listeners when we just went through that exercise. But what should we? We're in the final couple minutes here. What should we be looking forward to over the next couple weeks? What are you thinking?
Next 2 weeks, who knows? The next couple of months, few months, buckle up. It's going to be interesting. We still have a whole Democratic National Convention. We still have some debates coming up and things like that. And then there's always, as long as nobody or somebody does something stupid in the world, last Saturday fell under the definition of somebody doing something stupid. That was by far the epitome of someone doing something stupid, and it could have been a lot worse. So.
Well, what are the numbers that are coming out that we're going to talk about in a couple of weeks from now? What's the next report from the Feds?
Yeah. Well, we'll always talk about interest rates and things. If you look at markets from an earnings standpoint, we're kind of right in the middle of the second quarter earnings report.
Right.
So it's a little early. The bank stocks did fantastic. The automakers are done real well. So the initial earnings reports from the second quarter this year are looking very good. Okay.
Early returns are good, ladies and gentlemen.
Not from Tesla and not from Alphabet, but from a broader based look. So hopefully 2 weeks from now, I'll be able to say to you, we had something 70-80% of the stocks had positive reports, and the future earnings numbers are actually being raised a little bit more because of that. So yeah, those are the things I'll be keeping a real close eye on at least for the next couple of weeks.
Perfect.
Yeah.
Well, it's good to have you back.
It's good to be back.
Not that we're glad or something that it's not Katelyn. Katelyn did a great job. We were happy to have Katelyn with us last week and talking about the compliance things. Mm-hmm. But it's good to have you back with us and talking numbers and starting to look forward to what's next.
Yeah. Well.
And you got everybody excited when you said, "Oh my gosh, it's the next 3 months or next 4 months."
It always is. There's no reason for this year to be different. So, but no, I think especially sitting listening to Katelyn's interview, it's like I listened to it and I got to listen to it from a little bit of a different perspective as opposed to listening to myself drone on. But I enjoy this process. I really do. This process hopefully is good for the people who are listening. That would be a great thing if it's actually helping some people out. But it's good for me to sit here with you and talk about these things. We can go all the way back to the fundamentals, and then we can work our way up the pyramid a little bit and talk about some more specific things. And for me personally, it's good for me to talk about those things and then hear myself talk about those things. It keeps the mind running. So that's a long way of saying I appreciate you and
thank you.
Appreciate this whole process.
Well, it certainly motivates the thoughts, and as you said, hopefully it motivates the listeners and inspires them to a greater understanding. And for those who have somehow been hesitant for some reason in the past, motivates them to get their portfolios going, and especially the younger people that we've talked about so many times is like, hey, invest. Don't wait. Now is the time. And it doesn't matter whether you're younger. If you're young in the investment world, now's the time. I don't care what your actual birth date age is. Now is always the time. Don't wait, because
don't wait till tomorrow.
You
said a mouthful. If you're a young person, just put it away and forget about it. Right. Just put it. Be consistent. Then whatever you can afford to put away, put it away. It's the best thing you can do for yourself.
There's no better time, because I think the key thing that you just said, Art, is if you're a young person, just put it away and forget about it. When you get older, you may have been putting it away and you have some put away, but you're starting to worry about it. Now is the best time. You can just put it away and forget about it. It has time to go up and down and all around and ride the roller coaster. Short of losing it all, there's going to be some growth there that you can count on in those later years, and then worry about it then. But
it's really that last. You'll have several doublings of your investment. Over time, and your 20s and 30s are boring. I mean, if you've got $10,000 socked away and it doubles to 20, okay, that's a good thing. But it's not that. I mean, it's not all that exciting. If you're in your 50s or 60s and you get that last double, and let's say you go from $800,000 to $1.6 million, that's exciting. And it's that last. It's that people are always worried, and I try and explain to them, you got one more double coming to you, and that last double is the big one. That's the one that gets you to where you want to be, right? So, it's, again, you talk to 20-year-olds and, their eyes start to glass over, and rightfully so. But, one more time, if we're talking to young people right now, just do it. Trust us on this one. Just do it. So
perfect.
Yeah.
Well, we just did it.
There you go.
We just ran out of time.
Episode 30.
Episode 30 is in the can, as they say. So, Art, thank you so much.
No, thanks, Chuck. I appreciate you.
Back in 2 weeks.
See you soon.
Take care.
Bye.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.